Hi and welcome back. In today's video, we're going to review 2 mistakes that all traders make, and I'm going to offer you a shift in perspective that may help you reduce those errors. Even with a great trading plan, in the beginning, I could not successfully earn a profit. I was making mistakes on my losing trades, and I was making mistakes on my winning trades. This video may provide a shift in perspective that will help you if you're making the same mistakes where you're losing more money than you should have, and you're also making the mistakes where you're not making as much money as you could have. Remember, in just 10 minutes a day, you can learn to apply the repeatable laws that grow money and can help you get wealthy over time. How can this be? Well, getting wealthy is a matter of making money, keeping your money, and then growing your money over time. Even if you're making money by working at a fast food restaurant, you can get rich over time if you simply develop the habit of saving just $20 a week and carefully make those savings grow with just a little bit of interest compounded year after year. When you start taking smaller losses when you are wrong, and you start gaining larger profits when you're correct, added together, you end up creating a cycle of steady growth of your investments. You can trade larger volumes then, and you can dramatically expand your future wealth potential. The trouble that most people have that prevents them from getting wealthy is they do not feel good about keeping their money, and they have not practiced feeling good about watching their money grow. Instead, we feel good by spending our money. The slick sales messages from the debt pushers gets to us, buy it now with easy payments, and then we end up paying interest on that purchase, which in effect is compounding the growth of somebody else's money. Keep watching the other videos in this series as a way to reinforce and practice rehearsing the good feelings about keeping your money and the good feelings of watching your money grow. Before we can truly overcome the 2 mistakes that all traders make, we need to understand them. This understanding comes from learning new knowledge and then from practice. Mistake number 1. The first category of mistakes are those that we get punished for. We get punished by losing more money than we should have. Most people will learn from these mistakes over time, or they just have to quit trading because it's not working for them. We'll cover some specific strategies to help you prepare in advance to keep your losses small. Because it's not wrong and it's not a mistake to take losses in trading. But if you're making the mistake of dollar cost averaging that we'll cover in a moment, then your losses are always much bigger than they should have been. Mistake number 2. The other category of mistakes is harder to identify because we don't get punished for this category of mistakes. We may never be aware of this mistake because there's never a signpost that pops up to say, "You didn't get all these extras." Later in this video series, I'll review a pro tactic that overcomes this mistake and helps make your winning trades even bigger. So if you're making the mistakes where you're losing more money than you should have, and you're also making the mistakes where you're not making as much money as you could have, well then you want to break even in your trading, but you're really struggling from day to day, and I know it's tremendously frustrating for you. I've been there. You can overcome these mistakes. It will take some practice, but it is so worth it. Why do we make these trading mistakes? The reason we make these 2 categories of trading mistakes is fear and greed and lack of knowledge. The successful trader feels fear and greed, and the unsuccessful trader feels fear and greed as well. The difference is, the successful trader feels fear and greed at opposite times to the unsuccessful trader. Here's a couple examples to illustrate this point. Let's look at some mistakes we make when we're losing. Let's say we have 2 traders that go into an identical trade at the same time and it goes against them. That is, they buy the same coin at the same price at the same time and the price goes against them. Right away, the successful trader is fearful of losing money, and so he sells out of the position quickly. The unsuccessful trader starts to get greedy because he sees the price is now lower than it should be, and it's even a bigger opportunity to buy the dips. They may rationalize, so if I bought 100 coins at 100 Satoshi and the price is now 80 Satoshi, then I could buy another 100 coins and I would average out my price. Therefore, I would have 200 coins at an average price of 90, so really, I'm only down 10. And such a trader might begin to imagine potential profits as a way of avoiding dealing with the current loss. When prices go up, I'm going to make such a killing because I'm into this position when it's even a better bargain. The reality is, this trader is not managing risk correctly. Should the price continue to go down, the trader now has a bigger position when they're losing. As the price goes down, he may finally get to the point where he's feeling so much pain that he has to get out of the position no matter what. And of course, you end up with a much larger loss than you should have. Naturally, this trader will feel discouraged and kind of panicky when he trades another position. And actually, that emotion is a very good guide. You want to be feeling calm, confident, and prepared when you are ready to put on a trade. Mistakes we make when we're winning. Let's go to the second example where we have both traders buy the same coin at the same time at the same price, and it goes with their expectations, so they're both profitable. The successful trader now feels greedy because he's been proven correct, and so he buys even more of the coin to have a larger position. The unsuccessful trader, however, may be fearful of losing his profits and quickly cashes out the position too soon. As the price continues to go on in the direction they both wanted, the unsuccessful trader now will feel even more anxiety watching the price go. And they'll head into the next trade with even more uncertainty, more FOMO, and more doubt. And so many traders get killed in the market by making the mistakes that cause greater losses, and they're making the mistakes that reduce their profits. Now here's the big takeaway. Both of these mistakes are the result of trying to do the wrong job. Most new traders believe that they are responsible for making money in trading, but that is not our job at all. Successful traders know our job is all about managing risk, reducing risk on losing trades, and increasing the risk on the winning trades. If you're struggling with your trading, surround yourself with successful thinking. Digital Currency Traders hosts a private community. We give you the trading plan, we give you daily data, and mentorship in our membership area to help you change the way you think and feel about money. You can gain the knowledge and build the habits that successful traders have. Now, both paper trading and back testing are a really good starting approach. You can learn and prepare for each stage of the trade without risking real money. And yet, a simulation lacks the realism. Paper trading and back testing do not include the important emotions of fear and greed that are so often the cause that makes good traders make bad choices and lose money. We've covered a little bit about how fear and greed may be holding you back and causing you to lose money. In a later video, we'll cover additional strategies on how to overcome fear and greed in your trading. It is that important. So thanks again for being here. If you're interested in this content, hit the thumbs up button. Be sure to subscribe and hit the bell icon so you get notified when the next videos are out. Thanks again. Trade safe and keep those losses small.